right now, the Federal Reserve is keeping interest rates near zero, stating that things are not deteriorating as fast. It still doesn't look great. The Fed has to sort through a mountain of data in what some call a hurricane of political and economic activity, all the while facing the possibility of a congressional investigation regarding Ben Bernanke. Joe Krier, president of Krier Wealth Management, is here to talk more about something that Michelle Steele alluded to. Good morning to you.
Good morning, Stacy.
So what's going on with Ben Bernanke?
Well, it all goes back to last October when it was all chaos out there. And on Monday, Merrill Lynch was solvent. On Friday, they were near bankruptcy. And suddenly the next day, Bank of America was taking over Merrill Lynch. Ken Lewis, the CEO of Bank of America, said, hey, we were forced to do this. They didn't give us a choice.
He's saying the Feds made them do it.
The Feds made them do it, and now Congress is saying that Hank Paulson and Ben Bernanke forced the deal through without going through due process and asking Congress and going through all the correct channels.
I know there's a lot of people employed by Bank of America and Merrill Lynch in this city, so we're going to keep up on this story for you. So, I mean, is this a good thing or a bad thing that they were forced to do it?
Well, you know, and again, it's not known completely whether they were actually forced to do it, but the fact is that if you go back to last October, it was a domino effect out there in the financial marketplace, and letting Merrill Lynch go down could have caused a ripple effect. It might have made this situation a lot worse. So combining Merrill and Bank of America kind of kept some continuity there that allowed the system to maybe start taking care of itself.
Is there a possibility that this may be undone one day?
There could be, and Ken Lewis raised the question a few months ago when it looked like the deal wasn't going to work. Now all of a sudden the deal is starting to work and the two organizations are meshing quite well. So he's quieted down quite a bit, but the cat's out of the bag.
Okay, so we know yesterday that the Fed decided, or was it yesterday or the day before?
Yesterday.
Yes, just yesterday, that they decided to leave interest rates unchanged.
Right.
What else came out of that meeting?
Yeah, you know, and what they do now, people look at what their actual decision is, and then just as important is what their commentary is after the decision.
Sure.
And, you know, some of the comments coming out are that, yeah, we're still declining, but it's shrinking at a slower pace. Inflation is going to remain subdued for some time. That's an important statement because people are freaking out right now that, hey, we've injected all this money in the system. It could cause runaway inflation. And then household spending is showing signs of stabilizing. You know, that's a questionable thing depending on how you measure it. But we do know that homeowners in America and just average households are starting to save a little bit more. You know, they're starting to pay down their debt, and you know, things are loosening up over at Best Buy and Walmart and so forth.
Okay, but there are, you know, despite the speak right there, that things are, you know, somewhat positive, there's still some lingering troubles out there.
Yeah, they're managing consumer expectations in a big way right now, and the consumer is absolutely the key to our economy, and consumer sentiment really gets to the heart of it. So they don't want to come out and say, hey, we're completely scared, but there are a few other shoes that could drop, such as, you know, gas prices went up 54 days in a row here coming into the summer. You know, consumer credit, as far as credit cards, there's a lot of defaults out there. Job losses are continued, and we just think taxpayers and voters are overwhelmed right now.
And what do you mean by that?
Well, there's a firestorm of activity. You know, you alluded to it in your introduction. There's so much going on with the economy, the political front. You know, last night healthcare was kind of the big issue, and people are just worried that, hey, everything is going to change, and you know, the bottom line is we just kind of have to accept it. There is a new normal that's going to emerge from this, and it's going to take a little while to get used to that.
What will that new normal look like? That is the question.
Definitely.
All right, Joe Krier, president of Krier Wealth Management, joining us to talk about the Fed and what they talked about. Thanks, Joe.